Welcome, everybody. Today, my guest is Raissa Racohen, managing partner at Longevity Venture Partners. Recently, I read in the news that she has raised 30 million for her venture capital investment firms, and I wanted absolutely to have her as a guest because the focus of her investment company is great and very precious for all of us. It's an impact VC. So hello, Raissa, how are you?
Hi, how are you? Thank you for having me.
It's a great pleasure and honor to have you. Um, if you agree, we will have a two-side, let's say, discussion. I want a little bit to know you better. What is your background? How you committed into entrepreneurship, because you're also an entrepreneur, and how then you committed into investment, because it's not necessarily easy to understand the move from one side to the other side of the table. And then we will talk about in deep about the Longevity Venture Partners that you co-founded. Is it fine?
Great. Sounds great.
Fantastic, fantastic. So please, could you a little bit talk about your path in and your journey, even as a student? Did you already have a dream to become entrepreneur or investor, or is it something that came into your mind at the end of your journey, or did you have this in mind very early?
Sure, sure. So I was always taken with entrepreneurship. When I went to Brown University, I studied entrepreneurship under some of the professors there. Professor Danny Warshay was a mentor of mine. And I always loved entrepreneurship. I never imagined myself on the investor side, but I always saw myself as an entrepreneur. Right when I graduated, I moved to Israel and I started my career there. I was at a large venture firm, Jerusalem Venture Partners. And then I spent a couple years in high tech at a company called NDS, which was acquired by Cisco. So I lived through that. It was at the time the largest acquisition in Israeli history, and a very interesting one actually. So after I left Cisco, I'll back up a second because it's quite an interesting journey. About 10 years ago, this is right after I left Cisco, my eldest was born. I have 4 boys.
Wow, congratulations.
And when he was born, we got stuck in the hospital for a very long time. So he was in the NICU for about 5 months. And it was just a terrible introduction to parenthood, and really my first time encountering the healthcare system. And it was a foreign healthcare system for me. And we really struggled to understand and to advocate. And, sort of the learning curve was very, very steep. And so when we got out of the hospital, I wrote a book. It was about, the very personal journey about my, first time motherhood and dealing with, institutional healthcare from the patient and caregiver side. And I published it. It's up on Amazon. It's called Sugar, A Tale of Motherhood and Medicine. And I set about to build my first startup, which was solving, the problem that I had, which was, one of health literacy and learning how to advocate and navigate the healthcare system. So I gave myself 18 months to build sustainable revenue, which, as it turns out in healthcare, is not enough time, not long enough for your sales cycle. And when I ended up closing that, at the time it was demoralizing, but now I call it, failing forward. The relationships that I had built in, building that startup, led me to start working with some, private investors and started doing early stage investing. So the entrepreneurial experience that I had really taught me everything I know about investing, which is there's no substitute for being in the right place at the right time. And it colors, pretty much all of my thinking, on the investor side.
Thank you for sharing this experience and with us, because I didn't prepare the question that I would like to ask you now, because I just popped up in my mind.
Fine.
So you faced the health system in Israel,
Mhm.
which is one of the best in the world, and as you are also an American, by net, you are born in America and you grow up, that the health system in America can be excellent and at the same time very awful. There is a do you see this kind of opportunity from somewhere like Israel? When you have a disease problem, you are very good to take in charge, by the system, and compared to the US, and how do you see the global potential of innovation in health? And because as a VC, you need to have a startup that can be a global success. And the problem of the health system, that they are so different from country to country, and even in the US, I think from state to state it's different. So that's something. You were faced, by obligation with your story, but how did you think about this now?
So, I mean, you hit the nail on the head. There are a lot of issues that you come up against as an entrepreneur, and I'll dive into a few of them. The main thing that's top of mind for me, when I think about global healthcare, right, is what can actually be solved by venture capital? What is a scalable technology problem? And what is a problem that's a social, political, cultural, systematic problem? Because you can throw as much money as you want at that, but it's not going to do anything, right? So in terms of America, when you look at the way the system is structured, and from a financial perspective, it's very, very unfair. I mean, any country with socialized medicine is their citizens should consider themselves very lucky, because it's inherently fair. We were 5 months in the NICU, and we walked out, and we had no hospital bill. If that happened in America, we would be in serious medical debt. And so the problem of that health inequity is a very, very serious problem. I'm not convinced that it's one that can be solved with venture capital. So not only are there specific issues that you're coming across as an entrepreneur, but when you're on the investor side, it's, what can be solved with scalable technology and what cannot. And so I think as an ecosystem, we really need to band together and have a global sort of rethink. But I'll dive into the specifics that you mentioned. So as an Israeli entrepreneur, Israelis have incredible technologies, but they trial them in the Israeli healthcare system, and the data is not reflective of how they're going to perform in the US.
Absolutely.
So from an investor perspective, they haven't really de-risked anything. So on one hand, they have, data. On the other hand, from my perspective, it's not de-risked at all. So I'm not sure it's necessarily worth their time to do pilots in Israel. So that's kind of one that's really top of mind. And the other one in the healthcare system is, again, back to the sales cycle. It's an 18 to 24 month sales cycle. And, if you're selling into, hospitals, any medical institutions, those are company killers. You need to prepare for that. You need to prepare for the length of that sales cycle, because that's a company killer.
Absolutely. We will talk about indeed, because the go-to market to the health market is very complicated. I know because I supported many e-health startups also, and the business model is a hell. And now in France, we try to convince the founders, to do much more B2C first, and try to sell directly to patient or to the family around who support, because they are willing to pay, because it's a way to survive, and then at the same time trying to negotiate a deal with the hospital, etc. But it's a hell, as you say. It's a long process. You have a lot of hierarchical point, to pass. And it's not just hospital, also the insurer who you have to convince to reimburse the things. So it's a very complicated things, but at the same time, it's a necessity for all of us. So very complicated. So okay, perfect. So this is make a great, let's say, introduction to longevity venture partners. So how did you think about launching your own venture capital, and why, particularly in the silver economy or silver technology field?
So because of that, the history that I have, on the personal side, I was very driven towards healthcare, and towards caregiving. And so the silver tech economy, sort of as a byproduct, became a passion of mine, and something that I, focused very heavily on, even, a few years ago when I was looking sort of more broadly at the early stage ecosystem and opportunities. I always had an eye towards silver tech. And when I met my partners, who are all sort of operators in the nursing home and care space, it was a marriage of minds. We all very much deeply cared about the ecosystem and the industry, and so we started with a private fund that was backed just by one of the partners, and that was in 2020. So it was a private micro fund dedicated to silver tech, just to test out the thesis. And we made 9 investments. I returned the fund in cash in 2 years.
Wow.
And with that momentum, we were able to raise this next fund, which is not a private fund. We have many LPs, all high net worth individuals dedicated, that care about the silver tech space as well.
It's a fascinating, and the investment thesis that focus on silver tech and that is included into the silver economy. That it's all how can I say, it seduce easily your LP, or did you have to fight and to prove? Look at the economics. We are getting older and older. Look at the demographics in the developing country. The young people are like the ice melting, and the old people are are bubbling like how do you defend your, is it something that was evident for your LP or not?
So I think any sort of emerging fund manager knows that your first fund is built on trust. So it was really people in our network that trusted my partners, and that trusted me based off the track record that we had built together. So one, it was based on trust. Two, silver tech is not climate tech. It's not the buzzword of the day. It's not, for lack of a better, it's not attractive enough. It's not sexy enough, for a lack of a better word, to raise in venture, especially at the moment. And so if you do look at the numbers, it's really impossible to ignore. Basically with the, reverse triangle of the fertility rate and the baby boomer generation that's aging, and, we call it the silver tsunami. It's really hard to ignore when you look at the numbers. But again, it's not getting the credit that it deserves on the international stage.
It's a very fascinating, because I try to put myself in the suit of your LP, but also at the same time of the client of your startup, because finally they are the same. They are 40 years older, so with white hair. So as an individual, they are surely facing the consequence of aging. We all know that there is exponential increase of having disease when you pass the 45 years old, and 50 years old. There is this exponential growth of probability to have a disease. So as individual, you know that you have you are facing things. But as a consumer or as an investor into a fund, you think you are still young. You want, as you say, you want to your thing. You want to continue to live a young life and to have fun things. And there is a paradox, in their mind. I think there is a complicated to consider themselves. Okay, if I invest or if I buy a product that is designed for seniors, uh, you know. Do you feel this paradox also when you discuss with?
Absolutely. So first on the consumer side, it's hard. Nobody wants to wear the emergency button. No one wants to buy, a specific. Maybe you would buy it for your for a parent or for a loved one, but no one wants to consider themselves old. And so it's very hard on the consumer side when the consumer doesn't want your product, but they need it, right? So let's talk about, fall prevention or loneliness. These are, interesting problems that are global problems. And, do people want robots in their homes? It's hard to say. In terms of the way I look at it, any kind of passive technology that's able to provide that peace of mind is worth looking into.
It's fascinating. I discussed with an entrepreneur in the silver tech who told me, when we market something for the elders, we don't market it for the elders. We target, we communicate it to them just like they were 30 years old. For example, a robot to fight loneliness. Instead of saying it's a robot to fight your loneliness, because when you're lonely you have a cognitive decline, they say it's a robot to make you fun and make you dance. It's a trick, but it works, in terms of marketing.
I'm not interested in investing in tricks. I'm interested in investing in game-changing technologies that ultimately are going to change the way we live and age.
Absolutely.
So my thesis is not, I'm not looking for the biotech, how do we add another 30 years to our lives? And, I'm not looking for the one-off products. I'm looking for, silver tech really cuts, it's a horizontal in my mind instead of a vertical, right? It cuts across insure tech and fintech and ed tech and health tech, and future of work is a category that I really love looking at, because I think the retirement age is completely irrelevant at this point. And if you had a way to ramp up and ramp down as you pleased, I think that would be a game changer in terms of the way we age. So so my perspective, I think, is a little bit different and a little more holistic. How do we change the game? Why are we stopping learning when we're 20? Why are we stopping to work when we're in our 60s? Why don't we have a more holistic life? And why can't technology facilitate
that? And talking about your technology interest, are you partially answer it, of course, but I would like you to develop a little bit more. Are you focused only on digital technology, or you go into the hardware and physical technology? We talk about robots, but it could be also something else, such as device, or because I ask this question because the hardware and device are I am used to say is the abandoned child of the VC industry. The VC doesn't like physical device and hardware because they are very difficult to develop, very difficult for the exit. There is a big exit market, but it takes a lot of time before the exit. So, what is your thought about your technology interest?
So, I'm not afraid of hardware. But it's not going to be heavy in the portfolio. I'm going to be able to make 2 or 3 bets in the hardware space. In the first fund, I had 1 device, and that was actually exited quite quickly. And so I think we will again, any passive technologies that are gathering new personalized data that allow consumers to age in place, I'm interested and I'm actively looking. Robots, I'm looking, but I'm not convinced that they're going to solve the problems that we want them to solve. Meaning in the automation space, absolutely. In the loneliness space, you know, I'm not convinced.
Yeah. Makes sense. So how, let's say, talk about a little bit about longevity venture partners. How do you scout and find your deal flow? Do you invest only in Israeli-based headquartered startup, or do you seek European or American also? Because it's for an emerging VC, it's complicated, to deal all the legal peculiarity of each country. You have to deal with the law system of Israel, and if you want to invest in European ones, you have to understand also how it works, the term sheet and every law around the startup investment in France and in the United States, etc. So do you have what is your geographical way of scouting and investing?
Sure. So we're based in Israel. So that's going to be, and has historically been, about 80% of the portfolio. Because silver tech is such a, I don't think it's niche, but the deal flow is very specific. So I do scout globally, and I will look at companies abroad. Although I think that what's coming out of the Israeli ecosystem is some of the most exciting that I've seen. And so, we'll continue with the portfolio will be about 80% Israeli or Israeli abroad.
And the 20% rest is American or in British, French, or?
To be determined. I mean, the truth is that Fund One, we had one US and one Japanese investment.
Wow.
And we are just looking. I look in the space, I see everything, and I try to grab the top 1% of entrepreneurs and back the top 1% of entrepreneurs that I see in the space.
Makes sense. You talk about Japanese investment in the Japanese startup. Indeed, the problem there is crazy.
They're paying attention. Yeah,
absolutely. And what about the demographics in Israel? Because I know that there is a dynamic country with a lot of born, but what is the dynamic? Is there also this inversion of the demographic chart or not?
So Israel is, I think, one of the only countries in the OECD with a positive birth rate. And so I think it's maybe less acute here. It's also very small geography, right? So in America, if you live far away from your parents and you can't take care of them, it's really a problem. And if you're in Israel, you drive 2 hours. You know what I mean? Like the geography is very small. And it sort of goes back to kind of the socialized system. It's a very, community, and there's just a strong social fabric here. So I think, in Israel, you actually feel the silver tech problems less acutely, but they're still there. But it's very interesting once you start looking across the globe. I mean, Japan is very, very aware of the, of the silver tsunami and the effects thereof. If you go to, the UAE, the social fabric there is very tight. They don't even have nursing homes. People live with their families, right? And it's a society where there's very, there's a lot of foreigners that come in and take care of the elderly population in their homes with their families. So it's just really interesting to look, cross-culturally at the way everyone is trying to solve these different problems that come up with the aging society.
Absolutely. And in marketing there is a framework that talk about the level of awareness of a problem that potential clients can have. If they are fully aware, of course, they are easy to convince because they are seeking a problem, they are seeking a solution, and they already know all the solution. They are easy client. But you have also at the bottom of the framework, you have people who are not aware that they have the problem, and they are the most difficult because you have to evangelize. You have to educate the market, and do you also evaluate this kind of let's say where the technology is in this framework, to see if the founder will have to do a lot of market education, or they are ready to sell, or this is something you look at also?
Yeah, look, you don't really want to be the first mover in that situation when you're educating a market, right? You kind of want to be number two, number three, where you can pick up on the work that the first one has done. And so, it's certainly something we're aware of. I think, Japan is very aware of what's going on, and there's a stronger willingness to pay. Canada, there's actually a strong awareness. And in the US, it's still falling on the consumer. And so it's an interesting dynamic, but it is top of mind for a lot of those consumers that are in the sandwich generation.
Again, concerning the deal flow and how you select your startups. So you talk about that you focus mainly on the Israeli startup, 80%, but you're also open to have connection and maybe even to see pitch from outside founders. How do you do your let's say your interview? Is it only by Zoom, or do you like to meet them and to see them in real life, or are you a full remote VC investor? What type of investor are you in
So
this?
I would prefer to meet and see the offices and see the product, and I think you have more stronger data points when you can go somewhere and observe. On the other hand, I was allocating all through COVID, so
Absolutely.
that was all remote. And so I think it's actually harder to pitch over Zoom and to build a relationship remotely. So the entrepreneurs that manage to do that, I think, are very, very strong.
Absolutely. And so do you participate in startup weekends and these kind of events to meet them and to meet them in stage and defending their vision? I guess it's also a way that you work.
Yeah, we absolutely will go to conferences and participate in those judging panels. But a lot of our deal flow comes from a trusted network of co-investors that we work with, and also entrepreneurs. I don't want to sit in an ivory tower and wait for deal flow to come to me. So I very actively and even sometimes aggressively scout companies. And if I get approached, if they're charming enough, I'm happy to take a meeting. Absolutely.
So you understand why I asked this question, because if people will watch this interview, will say, "Oh, it's interesting. We are doing something in the silver tech. Maybe they would like to to connect to you." So you are open to be contacted on LinkedIn or directly through your site. Or do you work only on peer-to-peer recommendation?
I think, if you can get a warm, this is in general, right? For entrepreneurs, if you can get a warm introduction through you, or if you could send me decks, or if they know someone who, warm introductions are better because for some reason trust is transferable, I guess. So I think that's a better way to start a relationship, but absolutely, I'm available.
Fantastic. So I will make a little transition just to thank Stéphane Nasser, who helped me to prepare this interview. He's the co-founder CEO of OpenVC, a platform that connects the best founder to the best VC, such as yourself. And he played the role of the warm introducer, because work on with the startup side to make their documents ready and to see that, because many startups, when they send pitch deck, it's full of error and they are not well prepared, they do awful cold emailing. He helped them to be visible. I don't know if the term is, let's invent the term. And he also worked with the VC side of to establish a close relationship, to know exactly what type of investor they want, the type of founder they want, so that he can make the great warm introduction. So thanks Stefan, and for your help to the preparation of this interview. Concerning Letman, your investment, so you are the first. Do you like to invest alone or with a syndicate of other VC, and how much equity do you like to take in the startups?
Yeah, so it's an interesting market right now. I can give you some general rules, but we break them often. And the truth is, we like to take between 5 to 10% in any company. We generally don't lead the rounds, but we're sort of the number 2 in the cap table there. And we collaborate across. We have very deep relationships globally. So we're very sort of agnostic in terms of what is the best strategic support that we can build in the funding round. So is it just VCs, or is it strategic angels, or is it strategic institutions that want to come in? So how are you going to think about building the strongest round that can support the company to their next milestones?
And what is the average ticket you like to invest in terms of money?
So it again depends on the valuation, but anywhere from $250 to $1 million.
Wow! Oh, it's great. Maybe I forget a question about the selection. Oh yes, of course. What is the stage you invest in? Do you like the pre-seed idea stage, from the idea to the prototype, or do you a little bit later prototype to first customer one?
So ideally, it's a very strong team. Again, I'm looking for the top 1%. I have invested pre-product, but ideally there's a product with some kind of data, whether it's LOIs or partnerships or design partners from their customers. So usually I like to see 3 to 5 relationships with those customers, ideally paid, but unpaid is it's just signals for me where I can get to conviction, where I can say, look, this is a significant problem. This is the best team we've identified to tackle this problem, and they're setting about it the right way.
It's very important, because you are not putting a no way. You accept the idea to look at the founders if they are pre-seed, but if there are some, let's say, some convincible traction, proof of traction, you can look and even invest. So it's very interesting, but also, of course, we all prefer customer ready startups. But of course, this is very interesting, because it's honorable as a VC venture capital firm, to look at the pre-seed, but of course giving the advice to founders before knocking at the door of a VC, try to have some reliable traction. And it's not necessarily a customer, it could be user, it could be big stakeholders, partnership with big name, etc. This can be a good proof for a VC that you can bring the project to the next milestone. And so okay, we talk about the deal flow, the investment, and about your commitment with the startup portfolio. Are you hands off? You make the money, and then guys, you're or do you like to have some kind of hands-on active relationship with them, and how do you do that?
Sure. So the truth is that my partners have the deep operational experience in the silver tech industry. So they're available to our portfolio companies, and they can provide kind of the industry expertise and network that I think our startups are really looking for. For me, I'm usually sometimes I sit on boards, but I'm usually the first call if something good or something bad happens. So I get a text when they've landed contracts, or when, things are good, and also, and lately when things are not so good. So I consider myself an entrepreneur at heart. So I really try to, support my entrepreneurs, because it's a journey, and it's not a linear one.
Absolutely, because most of the time, entrepreneurship is a psychological fight against the market and against ourselves too. And having a VC that can just, have some good words, congratulate you when you are alone in French. We have an expression that's saying having. I will say it in French. I will translate. Avoir le nez dans le guidon, which means having your nose into the bike. You are so focused on what you're doing that you need someone to give you some kind of outside feedback, with a frank and direct, honest, and this is very important, that what an early stage VC can do for this portfolio. It can make a real difference. But you have also your partner, as you said. They are door openers because they are deeply connected to the industry. Stefan asked me also to a question that during because you invested during the COVID, right? So you were in the middle of the cyclone. So how do you have some anecdote to share how you supported and some startup, because it was a crazy moment all the way all on the planet. So particularly for the VC industry. So
an anecdote to support. Look, it was a hard time.
Yeah.
There were some hard conversations that we had with our entrepreneurs, and some, needed more money, and the dynamics of a private fund are maybe a little different than the dynamics of a fund when you're beholden to a number of LPs. And so there were conversations that we had that we said, we can't, we love what you've done, we can't continue to support you in this environment. There is just so much uncertainty, and even now there are companies that I have that are running out of runway, let's call it that. And I said, you guys, you do your heads down, you guys try to fundraise, maybe it's time for me to have some backdoor conversations with, investment bankers, and see if there's, a buyer for an acqui-hire. I know it's not nice to hear, but, let me do my job, you do your job, and, and then you'll have more cards to play on the table.
Yeah, I hope we are all out of this crazy momentum of COVID now. It's back behind us. Maybe not.
I don't think so.
Yeah, because everything that has bring the COVID on the table are still on the table. Overpopulation and lack of sanitary, lack of hygiene and wealth. Well, you mean you understand what I mean? There are parts of the world that are overpopulated. They are drink bad water, eating food that in the market, animal market. So what have been the cause? Maybe the cause of the emergence of the COVID is still on the table, and we will surely have other pandemics in the coming years. But let's say we are more prepared now. Hope so. So what type of exit do you expect in terms of duration? Do you want to have do you have some years in your mind, 5 years or 8 years or 6 years or less? And what type of exit do you prefer, or if you have a preference? I mean, do you prefer to be buy out by a bigger VC, or direct IPO, or having acquisition by big corporation? What is your best view in the exit?
So I think the manner is less important. Like the formula was, and maybe not relevant for the market today, but the formula was, show me how your startup gets from 0 to 1 million in ARR, 1 to 10, and 10 to 100 million. And then you're going to IPO. And you have 5 to 7 years to do that. That was the formula, right? but that was when the IPO market was happening, and it's not at the moment, or for the foreseeable future. It's you know,
You're
no one is
talking
a profit.
you're talking the IPO on the TAS or on the Nasdaq or
No,
everywhere?
anywhere, but
Anywhere.
specifically on the in the U.S. And so I think that formula may hold for companies that are building now, because they have time. They have 5 years to build that out. But I think, ultimately, what you have to ask yourself as an entrepreneur is, what value am I creating? Who's willing to pay for it, and how fast can I scale it? And so from an investor perspective, if I'm thinking about the value that you're creating, I need to know who's going to buy it on the consumer side, who's going to buy it as a potential acquirer, and how much they'd be willing to pay. And in the healthcare space and in the silver tech space, it's significantly lower multiples than you have in, cyber or e-commerce. So you need to be very careful about kind of your unit economics and your metrics. Maybe raise less than you see other companies raising, just so that you're keeping. I think now it's just a slide all the way back to the fundamentals, and that's just building value, and then that's manifested in the form of recurring revenue.
Great. Usually, we don't. There is a saying in France that never ask a VC to pitch a startup. It's not their job. It's the job of the founder, because the founder put their stake, in the game, so they defend their beefsteak. But can you pitch us some investment that you made recently, and it's exciting for the future? They are very, very exciting in terms of technology or market or both.
Oh, you mean to pitch my fund, or to pitch one of the companies we've invested in?
Yes, the startup in your portfolio. You invested recently.
Startups in the portfolio. So I don't know if I can disclose any of the ones that are.
Oh, they are in the R&D mode. Okay.
But I would say so. So Voxella AI is it's the Japanese company that I mentioned. I mean, they're Delaware incorporated, but they're focusing on the Japanese market, and they're creating a SaaS platform that sits on top of CCTV recordings and basically gets daily living activity of all of the residents.
Wow.
So you have basically an entire database of motion, where like normally it's actually done manually, and there are a lot of data points that are lost. But if you have it on camera, it's also fall prevention. But the larger vision is to build this database of motion for all the residents, so that you have this kind of snapshot and trends over time about their mobility. So I think they're doing super, super interesting stuff, and it's serial entrepreneurs. They had a previous exit in a completely different space. And what's really exciting, I think, about silver tech is that I'm seeing a lot of repeat entrepreneurs that decided that they want to do something meaningful, and they had an experience with their parent or their grandparent or someone, and it led them to the silver tech market. And so we're seeing a lot of seasoned entrepreneurs come and look in the silver tech market and start to build, which is really exciting.
Absolutely great, fascinating, and their content is broadcast on TV channel, which is the main way that elders connect to the CTV is a very, very important. So yes, great deal. What would be for you, let's say, a no way? Even you let's face it, you have a great team. They come, they have a great tech, they have a great pitch, but there is something for you is a no way.
Usually it's coachability.
Great.
If there's not a good fit, and we don't feel like we can work with entrepreneurs and be helpful to them, and we're not going to add that much value. And that's our job, is to write checks and add value.
Absolutely.
So I would say, that's kind of a number one for me.
It's a great answer, because having a VC or several VC on board is having uh, other kind of co-founder with you. If you are not willing to hear what they have to say, and to have this dance, this duo, this dance with them, don't knock at the door of VC. Just try to bootstrap, but it's great answer. Absolutely, you can have a great team, great product, great market, but if you are not coachable, do not knock at the door of the VC. You have to understand what they are telling to you and to dance with them. Um, Fantastic. So let's talk about a little bit of the future of longevity venture partners. What are you seeking? Are you raise? Would you like to raise other funds on the same verticals, other verticals, or and how do you see the because you're quite unique. That's why I wanted to have you on my podcast, because uh, even the subject is very important globally. I don't see in my knowledge a VC having the investment thesis focusing on the silver tech. Very few, maybe I missed them, but you're very unique.
I mean,
And
there's Prime Time and there's Third Act, but there's, in my mind, definitely not enough for the opportunity that's out there.
absolutely. So what is your future?
So for our vision, I mean, for the next couple of years, we're deploying this $30 million fund, pre-seed and seed. But I think ultimately, the longevity space deserves an empire. So I could see a growth fund in our future, and then another pre-seed seed fund, and kind of, building out those different instruments. But ultimately, it's just a conduit to support the entrepreneurs that are, doing fantastic things in this amazing space.
Great. It was a delight to have you, Raissa. Very insightful. What you do is precious and very important. Thank you so much for being my guest. And would you like to conclude with maybe some advice to founders, for the first time founders, because they are the one who need some guidelines from an experienced professional such as yourself?
Sure. There's no magic to it, but I think trust is the name of the game. This is a trust game. So, entrepreneurs that manage to build relationships and build trust, investors don't want to be nameless, faceless check writers, and the faster you can build trust in the industry, these are, multi-decade businesses and relationships. So invest in them.
Absolutely. Relationship is very important in every human interaction. Thank you so much again, and wish you the best, and hope to see you again at
Okay, thank you for having me, Ari. I really appreciate it. It's nice to be able to shed a light on a space that I think doesn't get enough attention.